A very, very good afternoon to everyone who's joined this session. First of all, I'd like to acknowledge all our panelists today. A very good afternoon to Team Pennywise. We have Akshat today, we have Asta, we have Sir Vinod Jain today with us. We have Gautam, Vishal, Srinath sir, and me and Ritu are from the Ethika team. So we have a full house today, and we are going to talk about tax saving strategies today. So I will, speak less because it's a very, very important session and important matter. I know a lot of you are, just waiting to kickstart this session. So I will leave the introductions to Akshat, and we are all here to, go through the session. We have a lot of experts, a lot of insights coming in regarding tax saving. So Akshat, all over to you.
Thank you, Shiva. Thank you so much for having us here once again. And yes, I know it's such an important topic that we thought it will make sense for all of us, to be here to help the people joining this webinar through Ethica to give them the right understanding about tax planning, especially with the latest budgets. Where now the people finally have some relief with the new tax changes. So very, very happy and very, very, happy to be here. Welcome, very, very, very warm welcome to all of you here. I think we have close to about 100 people plus already, Shiva, if I'm not wrong.
Yes, I think we're setting records today. It's we're 2 minutes into the session already, and we have about 120 people joining in.
Wow, wow, wow. So a topic which is close to almost everyone's heart, right? So
Yeah.
I think that's why we have this amazing participation. So yes, I hope you can all see my screen. So taxability of the salary, the income tax, the budget updates from 2025 is the topic for today. Namaste and very, very warm welcome to all of you on behalf of Pennywise, on behalf of Inmax, and on behalf of Ethica Work Life as well. We are very pleased to introduce you to our master facilitator today, Sir C.A. Vinod Jain. Well, his number of years of experience, his amount of experience talks wonders about him. And, I've been hearing a lot about him through my colleague Asta as well. So I wouldn't go into the details and I'll leave the same to Sir itself. But yeah, very, very, very happy and proud to have him facilitate session for us today.
Great.
Along with
Thank you.
Along with Vinod sir, we also have Asta, who's working along with him, and taking his legacy forward. So very, very warm welcome to Asta as well. Asta has been helping Ethica as well as the Pennywise team with a lot of sessions prior as well. So those of you who've joined these sessions earlier, you must have seen Asta around, and in fact, she's an active member of our community as well. So welcome to Asta too. And then, we have all the others to help you with your Q&As. Quick disclaimer before we get started with the contents, we at Pennywise, and through this session, we're trying to help you understand anything and everything about taxes. However, please be careful while you're filing your taxes, while you're planning your taxes, always take expert help whenever you have any sort of confusion, right? Cool. So on a scale of 1 to 10, how excited are all of you for this session? Okay, now before we are getting started, we quickly want to share this pre-workshop questionnaire with all of you. That would really, really help us understand where you are right now with respect to taxes, where you are with respect to your understanding. And also for those of you who had joined our last session on 14th of February, we had done one on effective budgeting. So, it has just 2 questions on that, and then a couple of questions on your current understanding of taxes. Should take you less than a minute to fill this up. But here is the, I've just posted the link. I'll just post it again. So please take a minute while we, set up the slides and everything for you. If you could quickly fill in this pre-workshop questionnaire, that would help us assess the current understanding. And in the meanwhile, Vishalji, Vinod sir, if you want to take up your screen sharing.
I can do the screen sharing, maybe. I can start with the screen sharing.
Sure.
I have you have to enable me to share the screen.
Yes, Asta, I'm doing that. Yeah.
So yeah, we'll just give you all another minute so that you can fill in the Yeah, we'll reshare the link. I think few of you are just joined in. Here is the link. You guys can just quickly fill it up, so that will give us some understanding of your current understanding on taxes. See, close to about 50 responses. We'll give another minute and then get started. Oh, wow. So Shiva, we're close to about 300 people now. I hope the section is going to break all your records.
Absolutely.
Some people still have a login issue, just you can check up. They're sending a chat.
Thank you, Akshay. Thank you, Shiva, for the warm introduction. And today we are going to talk about the recent changes which have happened in the budget affecting the salaried people. And I'm very happy to see that so many of you have joined and are participating in such a conference wherein you'll be gaining knowledge about how the taxation of salary takes place and how it will affect you and everything. So first of all, if I go through the sections wise, so section 15 of the Income Tax Act actually enables it's the charging section which actually taxes the salary. So whatever salary you are receiving from your employer is taxable in your hands, and section 15 of the act talks about the taxability. So any salary which you receive for in the entire year from April to March, so in income tax, whenever a financial year is being followed, so whatever salary you're receiving from April to March from your employer is being offered for taxation, and it is taxed as follows. So whatever salary you are receiving, there are some deductions which you get. First of all, there's a standard deduction. So before going on to standard deduction, I just want to set the base that around 4 years ago, 4 to 5 years ago, the government had brought in a new regime of taxation. Earlier, there was only one scheme of taxation wherein the slabs and the deductions were there, which was followed for quite a long time. Then there was introduction of a new regime of taxation wherein there were various slabs which were introduced, and some deductions were allowed. So in the old regime of taxation, there were a lot of deductions were allowed, but in the new regime of taxation, the slabs were a little on a lenient side, and the government decided not to give various deductions. And year by year, as the budgets have passed, the government has strengthened the new regime of taxation, and they want people to shift from old regime to new regime. And in new regime, they're not giving major deductions or exemptions as compared to the old regime of taxation. So this is the difference between old regime and new regime. The basic difference, we'll be understanding the tax structure, the slab rates, all the deductions, all the exemptions, what are the allowances, how a particular, we'll be also discussing about various scenarios wherein a particular, you have a particular salary, that how much tax it would have in old regime and how much tax it would have in new regime of taxation. So
Asta, before you go further, I only want to, apprise the participants that the government of India took a policy decision that, there are some people who are taking very, very large number of deductions. Somebody have a house rent deduction, somebody have an entertainment deduction, somebody has all kind of deductions. Whereas some people do not have that deduction. For example, if I have not borrowed for a house, that deduction is not there for me. And for the same matter with the various deductions. But then I feel losing, I'm paying the same tax, I'm paying a high tax rate. So I think the government worked out, will bring out a tax rate for those people who are not, wanting to, work on deductions, investments and things like, so that they don't bother about it. Plain vanilla salary, and you are only paying tax possibly at a lower tax rate. For example, earlier there was a medical bill, of up to 15,000 rupees, you are getting a deduction. So they said, without, and everybody is trying to, collect those medical bills, going to the employer, getting deductions. All that arena was very uncomfortable. You are going through a leave travel concession, you keep all the tickets, you keep all supportings, go for a mandatory leave, those all that thing I think Asa is going to discuss now. But primarily the government wanted people to be free, all people, whether they are doing this or they are not doing this, they should all get a really good good cool, and I think that cool air has actually really come in this year, in this year budget, which will be very, very soothing. I think we'll discuss. Asta, you can carry on, please.
Thank you. So, first of all, we'll be discussing about the deductions which are allowed from salaries. So there are two schemes, old regime and new regime. The old regime, 50,000 is allowed as a deduction. And in case of new regime, 75,000 will be allowed as a deduction. So here also you can see that the government is incentivizing and promoting the new regime of taxation, and additional 25,000 is available in case of a new regime of taxation. So this entertainment allowance deduction is only available in old regime, although this entertainment allowance is not applicable in various scenarios. So we will not go into details of this entertainment allowance, and this is only allowed in old regime and not in new regime. And there are some places where there are professional taxes which are being paid by the SESI. So that professional tax, like in Mumbai, like in Chennai, like in Mumbai and Bangalore, there is a system of being professional tax being paid. So any professional tax that is being paid is also allowed as a deduction, but it is also allowed only in case of old regime and not in case of new regime of taxation. So the major dilemma which everyone has is which regime to adopt, old regime or new regime. I think so when we are about to discuss the slab structures, the various deductions and allowances in subsequent slides, all of you might get an idea that which regime you should adopt, whether you should go for old regime or you should go for new regime of taxation. So this is a bird view of various components of salary which are there when a salary structure is being set. This is a standard which we have taken, and we have made a comparison as to whether it is taxable or not taxable in case of old regime or new regime of taxation. So when I talk about basic salary, it is fully taxable whether you go in old regime of taxation or you go in new regime of taxation. When I talk about house rent allowance, yes, the exemption is allowed. There's a particular formula which is prescribed in the Income Tax Act. We'll be discussing it in the next slide, according to which the exemption is allowed, but it is allowed only in case of old regime of taxation. In new regime of taxation, exemption is not allowed. So even if you are claiming HRA, you are paying rent to your employer, if you adopt new regime of taxation, there will be no deduction, no exemption will be claimable in case of HRA. Special allowance. So in case of special allowance, exemption is only allowed up to the actual amount spent. So normally it is taxable only, but in case of various companies where a uniform allowance is a specified uniform which you have to wear, or there's some research papers which are there. So in that case, if there's an actual amount being spent by the employee, then in that case, exemption is allowed. But in other cases where such scenarios are not there, it is fully taxable. And this scenario same in case of old regime as well as new regime. In new regime, exemption is only allowed for traveling, conveyance, and daily allowance, and obviously up to the actual amount spent. However, in case of old regime, uniform is also there, helper allowance is also there, research allowance is also there. So this is the difference. Although in 99% of companies, special allowance is being taxable. Because if I talk about traveling, conveyance, and daily allowance, I want to clarify one point. If it is a reimbursement, like you've incurred any expenditure and the employee has reimbursed that, so that is not forming part of your salary structure. So for that, you will not get an exemption because it is a pure reimbursement by an employer. Only if it is forming part of your salary and you're giving some bills and that is not being further reimbursed, it is forming part of your salary that you have to incur that expenditure, then if you provide any bills, then only that exemption will be provided. So it has to be very carefully seen by the employer as well as an employee that any wrong deduction, any wrong exemption is not claimed by the employee and not given by the employer. In case of leave travel concession, exemption is allowed. We'll be discussing how it is calculated in the subsequent slides in the old regime. In new regime, it is not allowed. And bonus, it is fully taxable, whether old regime or new regime. All type of bonuses are taxable, whether it is a Diwali bonus, it is a referral bonus, it is a incentive, it is a any type of bonus by whatever name called is fully taxable in case of old regime as well as in case of a new regime, whether it is a joining bonus. Joining bonus is these days very common. So it is fully taxable in case of old regime as well as in case of new regime of taxation. Now, if I talk about house rent of allowance, which is only allowed in old regime of taxation. So this is the basic formula wherein you can calculate that how your HRA amount is exempt. So you have to see, you have to do 3 calculations and least of the following is exempt. Number one is the actual amount received. So your salary structure has a HRA component, and for example, your basic salary is 1 lakh, your HRA is 50,000, and special allowances, let's say 50,000. So 2 lakh is the monthly draw that the employer is giving you. So in this case, 50,000 is the HRA component, and this will form part of the first portion wherein we are calculating HRA actual amount received 50,000. Second is rent paid less 10% of basic salary. So rent paid, whatever actual rent you are paying to your landlord. So that rent paid less 10% of basic salary. So in the example which I just took, in that example, 1 lakh was the basic salary. And we can assume that, let's say, 20,000 is the rent paid that you're paying to the landlord. So 2,40,000, 20,000 into 12, 2,40,000 annual, less 10% of basic salary, 1 lakh. So 1 lakh 10%, 2,40,000 minus 1 lakh into 10%. So that is the calculation that you have to do, and that is my second component. Then the third component is 50% of basic salary. So in my example, I've assumed, sorry, in the second component, I missed one figure. 1 lakh was the monthly component. So 10% of 12 lakh you have to do and not 1 lakh. So that's an annual thing that you are calculating. So rent also we multiply 20,000 into 12, 240, less 10% of 12 lakh. So 1 lakh 20. So resultant figure will be 1 lakh 20. So first figure was actual amount received 50,000 into 12, 6 lakh. Second is 2,40,000 less 1 lakh 20. 1 lakh 20 is the resultant figure of the second portion. Then third is 50% of basic salary. If it will be 50% of basic salary in case your house is located in Delhi, Mumbai, Kolkata, or Chennai, that is metro cities. And if you're not staying in metros, if your house is located elsewhere, your employer is elsewhere, your office is elsewhere, then it is 40% of the basic salary. So basic salary in my example was 1 lakh, 1 lakh into 12, 12 lakh, 12 lakh, 50% if my house is in Delhi. So basically 6 lakh is the component. So least of these three, whatever is resultant, will be my exempt HR allowance, irrespective of what I am getting. So I think so I'm clear. If there are any questions in relation to HRA calculation, maybe I can stop here, or I can move forward. Maybe whatever, if
The
you
only
can.
thing I want to supplement Astha here is, higher the rent you pay, please, higher the rent you pay, more is the exemption. So in case suppose you pay actual rent even more than the house rent allowance which you are getting, then possibly the entire house rent allowance can get exempted. So it depends on if you're bound to pay higher rent, higher the deduction. So actual amount received and rent paid are compared. Whatever rent is paid and 10% of basic salary is reduced from that. If that is more than the house rent allowance, then of course the entire house rent allowance get exempted. And of course 50%, 40% are the two limits which Astha has already explained. We can go further. Of course, now after the new regime which has come, I'm sure most of the people will not like to go to house rent allowance. I think that is what we're going to show in further slides. So that's why we are not going further. Of course, for the last year, that is 31st March 2025 year ending, that is the current year for which all of us are going to file income tax returns. Still, old regime versus new regime will be definitely a very, very important thing. So please file your returns carefully and select the whether you want to do old regime or you want to do new regime, because the tax implication is different, and individuals are allowed to opt for the old regime or new regime on year-to-year basis. Every year you can change. Astha ji, you can go further.
Yes, in this, I just want to add, individuals can select every year whether you want to select old regime or new regime of taxation. The only limitation is that suppose a person is also having income from business or profession. So then in that case, once you adopt, you can change only once. So which means if you are doing salary and you are side by having any business income or any consulting income, in that case, you will also be having an income under the head PGBP, it is known as profit and gains from business or profession. In that case, once you adopt old regime you can go back to new regime only once, and then you cannot change. So that is the limitation. Otherwise, pure salaried people have a freedom to select old regime and new regime every year.
Asta, there
Now,
are a couple of requests in the chat saying if we can explain them HRA with an example.
I think so it will be coming in the future slides. We have
Okay.
given it's a one full slide is with HR examples of
Sure,
various
sure.
scenarios.
Sure.
Yeah. So next is leave travel allowance. So leave travel allowance is popularly known as a LTA and traveling allowance. So in this, it is allowed in a block of 4 years. Right now, in this calendar year is followed. So the current LTA block is from 2022 to 2025, and an employee can claim it twice in a block of 4 years, and if you're not able to claim it twice, only one can be carried forward to the next calendar year block. So suppose you have claimed one and one is balanced, so one you can carry forward to the next calendar year. So in this, an actual journey must have taken place and only the traveling costs are incurred, like for the flight and the air ticket or the bus ticket. Whatever hotel, taxi, food, etc. Expenditure is incurred, that is not covered as a part of LTA. Only the traveling cost is incurred. Domestic travel is covered. International travel is not covered. And who all are covered? Self, spouse, and children. Parents, brothers, and sisters are covered only if they are dependent on you and there are no other earning member, and the entire family is dependent on you. Then only in that case, LTA captures the parents, brothers, and sisters. Otherwise, self, spouse, and children are only covered. So whatever, suppose you're going by flight, whatever flight ticket you have incurred, that proof you can submit to your employer, and on the basis of that, an LTA exemption will be claimed.
In this one change which came, of course, long ago, just for clarity, it is not necessary that LTA you avail for your hometown. You can go anywhere in India. And the maximum limit that means is the farthest distance where you can go. From Kanyakumari to Srinagar, or from Gujarat to maybe Manipur, maybe, the longest distance, any distance you can take within India, and that can be your travel. There is no problem, but actual travel has to be done. Evidence of actual travel should be there. Earlier, in initial years, I know for about 30 years of my career, it used to be LTA only for the traveling to your hometown. Now that hometown condition has been withdrawn, so you can go anywhere, but actual excursion has to be there. You should be definitely on leave also. That is also important. ऐसा नहीं हो कि you're actually working in the office, everything is attendance is marked, and still you're trying to claim LTA. That will amount to mismanagement and maybe misplanning and tax evasion rather than that. And traveling of self is also necessary. It is not that only your spouse, your children and parents, brothers and sisters traveling, you are still say, no, I am working. They all have gone to LTA. Your going is very, very necessary for claiming this exemption. Thank you. Asta, go further, please.
Yeah, thank you. Thank you, sir. So a quick quiz round just to see that we are on the same page. Everyone is able to follow what we are discussing. And if there are any further queries, we will be able to discuss them. So just a quick quiz. Which of the following are available under the new tax regime? Standard deduction under Section 16, entertainment allowance, house rent allowance, and leave travel allowance. You can put your answers in the chat. So I think so most of you are answering A, which is some of you have answered A and D, some of you have answered A and B, but most of you have answered A, and that is the correct answer. Only the standard deduction is allowed in new regime. Entertainment allowance, house rent, and leave travel allowance, all the three allowances are not allowed in the new tax regime. Only 75,000 rupees is allowed as a deduction in the new tax regime. How much is it? Okay, I've answered this just now. How much is the standard deduction under Section 16 allowed under new regime of Income Tax Act 1961? So yes, everyone is correct because I just answered this 75,000. So yes, now there are some investment options which are popularly used.
Sorry. Just wanted to
Yeah.
make an announcement, folks. All your questions, right? It'll be better if you put them in the Q&A section. So that'll be easier for, the host to answer, because in the chat they might get lost, right? So just use the Q&A section on Zoom and then you can put in all your questions. most of them will try to type in an answer. Whatever cannot be answered will be covered at the end.
Yeah,
Next
thank
time.
you,
Go ahead,
Akshay.
Asta. Yeah.
So investment options which are very, very popular among salaried people and used popularly are ATC, ATD, ATCCD. So just to inform you that all these investment options are only available in old regime. None of these are allowed in new regime of taxation. So those of you who are planning to go into new regime of taxation, you should consider and decide that whether you want to continue doing these investments or not. But putting that word, I would personally recommend, and we recommend our clients that if you're going for life insurance or if you're going for PF or PPF, even if you're not able to get a deduction under Section 80C of 1,50,000 of PF or PPF, you should continue doing these investments because these are long-term investments, give you interest at a good rate and that too tax-free. So whatever interest you are earning from PF or PPF is tax-free, whether you are in old regime of taxation or new regime of taxation. The only difference is that 1,50,000 will not be allowed as a deduction from your gross total income in case of new regime of taxation vis-a-vis old regime of taxation. But our advice is to continue these investments because it is a good policy, it is a good good way to keep invested and grow your money. So Section 80C covers a lot of things like life insurance premium, contribution to PF, PPF, equity linked savings scheme. If you have any home loan, so principal amount repayment. So Sukanya Samriddhi Yojana, it is for if a person is having a girl child, he can opt for Sukanya Samriddhi Yojana and there's a fixed amount which you can contribute in this scheme. And whenever your girl child will attain the age of 18 years, it can be used for the education or for the marriage of the girl child. So whosoever has a girl should open a Sukanya Samriddhi Yojana account. Then national saving certificate, tax saving fixed deposit for 5 years. And if there is any stamp duty which you've paid for the purchase of property or tuition fees of children, all these are covered in Section 80C. But the maximum amount that is allowed as a deduction is 1,50,000. Then Section 80CCC talks about contribution by SSC to pension fund of LIC or other insurance companies. All these 80C, 80CCC and 80CCD. All these you can contribute in 80CCD's contribution to NPS. So whether you contribute in 80C, 80CCC or 80CCD, the maximum amount of deduction allowed is only 1,50,000. Now, the next thing which I wanted to discuss is Section 80D, deduction in case of old regime with respect to health insurance premium. So whatever medical insurance premium you are paying, so suppose you're paying for self, spouse and children, and if you have dependent parents, these are the limits by which it is allowed. If you are below 60 years for self, spouse and children, the maximum deduction allowed is 25,000. If you have dependent parents, additional 25,000. So maximum 50,000. If you are below 60 but your parents are above 60 years, so then in your case 25, for dependent parents 50, maximum 75. You are also above 60, your parents are also above 60, so 50 and maximum 1 lakh of the deduction. So this is allowed. An addition of preventive health checkup, a maximum deduction of 5,000 is allowed annually. And just to say that this deduction is allowed only in case of old regime of taxation and not in case of new regime of taxation. Now, 80TTA talks about deduction in case of interest in saving accounts. This is also allowed only in case of old regime of taxation. So if you're earning any interest from your savings bank account, so then lower of the interest amount or 10,000, suppose your interest is 7,000, so you will be allowed a deduction of 7,000. But if you have an interest of 12,000, you'll be allowed a deduction of 10,000. So that is the maximum deduction which is allowed. Then in case of senior citizens, not only interest from savings bank account, but in case of interest from deposits is also allowed. So in that, the limit is lower of interest amount or 50,000, whichever is lower. But all these 80TTA and 80TTB both are allowed only in case of old regime of taxation. It is not allowed in case of new regime of taxation. So this I've already explained that all these are allowed only in old regime and not in new regime of taxation. A quick quiz again. How much is the maximum deduction allowed in a year under Section 80D of the Income Tax Act 1961 in case of health checkup? 1,000, 5,000, 10,000 or 8,000? You can put in your answers in the chat box. So I think so everyone is right. The answer is 5,000. Option B. Preventive health checkup is allowed up to a maximum limit of 5,000. So then this is exemption of NPS. So employer's contribution to NPS is exempt from tax up to the limit as specified below. It is important to note here that NPS is allowed, also available in new regime of taxation as well as old regime of taxation. So all of you are other than government employees. So we'll talk about other than government employees. In case of old regime of taxation, 10% of salary is allowed. Salary means basic salary and DA. And in case of new regime, only 14% of the salary is allowed. So whatever contribution is there, you have to see that the exemption is allowed only up to 14% in case of new regime and 10% in case of old regime of taxation. Now, this is an important slide, which is the main thing. So what are the slab rates as per the old regime and new regime of taxation? So this particular slide captures the slab rates as per the old regime of taxation. So up to 2,50,000. So in this slide, there are three categories: age 60 years less, age more than 60 and less than 80, and super senior, that is more than 80. So senior citizens are those whose age is more than 60, and super senior citizens are those whose age is more than 80 years. So this particular chart captures the slab rates in case of old regime in all these three type of individuals. We'll be discussing the first criteria more: individuals aged less than 60 years of age. So in this, you can see that up to 2,50,000, there is no tax. 2,50,000 to 3 lakh, the tax rate is 5%. 3 lakh to 5 lakh, also 5%. 5 lakh to 10 lakh, it is 20%, and 10 lakh and above is 30%. So in nutshell, there are only three slabs: 5, 20, and 30. So this is applicable for financial year 24-25 as well as 25-26. Now, if I talk about slab rates as per the new regime. So in this, there are two scenarios. One is on the left, we're talking about 24-25, financial year 24-25, and on the right hand side, it is from financial year 25 to 26. So if you see for 24-25 up to 3 lakhs is nil, 3 lakh to 7 lakh 5%, 7 lakh to 10 lakh 10%, 10 lakh to 12 lakh 15%, 12 lakh to 15 lakh 20%, and more than 15 lakh 30%. So in short, there are 5 slabs: 5, 10, 15, 20, 30. Vis-a-vis, if I go back to the previous slide, in old regime, there were only 3 slabs. And you see that from 2,50,000 to 5 lakh, it was 5%, 5 to 10, 20, and above 10, it was 30. Whereas in case of new regime of taxation, up to 10 lakh, there is only 10%. Then there is 15% slab also, 20% slab also. And once I go above 15, it is 30. And in case of old, above 10, it is 30. So straight away, you can see that there is a lot of difference. And now when I come to financial year 25-26, you are going to see a drastic difference. Here, up to 4 lakh, it is nil. 4 lakh to 8 lakh, it is 5%. 8 to 12, it is 10. 12 to 16, it is 15. If you compare with last year, up to 12, it was 15. Now it is up to 16, it is 15%. 16 to 20, it is 20%. 20 to 24, it is 25%. And only when I'm going above 24 lakhs, then it touches the highest slab rate, that is 30%. So if you talk about old regime of taxation, the moment my salary crosses 10 lakh, it is 30%. But in case of new regime of taxation, from next year onwards, I will only touch the highest slab rate of 30% the moment my salary crosses 24 lakhs. So that is the major incentive which the government is trying to give. And they want to give this incentive because they want to they want maximum people to adopt new regime of taxation and not go into the hassle of claiming those exemptions and deductions and planning their LTA or claiming those HRA deductions, submitting all the proofs to the employer and everything. So they don't want the employees to go into those hassles, and the employer also to verify all those receipts and then allow those deductions and exemptions to the employees.
There is one more thing, Astaji, I want to actually mention here. It has been noticed by the government that a large number of people are claiming deductions without incurring the corresponding expenditure. They are trying to claim house rent allowance deduction without paying the rent. They're trying to play LTC even without going for a vacation, and various other deductions they just claim. And that is what has been found in a large number of cases. So ultimately, government found it is very difficult for the government to verify. And rather than government verifying, they have given now an opportunity so that none of the citizens of the country need to really become a dishonest person to really take a tax benefit. They're given them benefit now, very large benefit. I think unbelievable kind of a benefit that up to 24 lakhs, it is only 25% tax rate. I think it was never dreamt by anybody before this thing was announced. And I think for this, a very big credit goes to our finance minister, Nirmala Sitharamanji, as well as to Honorable Prime Minister. I think they have sacrificed about more than 1 lakh crore of taxation while giving this rebate as compared to the last year. So I think everybody will avail, should avail maximum. One more thing I want to add here, actually, now it makes sense for everybody to disclose all the income to the tax coffers. There is a possibility that some people are getting some income which is not on record, which is off the record. And I think that money actually get wasted on unrequired expenditure, or it may really go into a real estate, or it may be lent out to somebody who never going to give back, and all the things like this. I think my personal experience tells me in last 45 years of practice that now, looking at the current scenario, more and more tax you pay, more and more wealth you make. That is the underlying thing. So even if somebody is giving you income, which is off the record, he is given you by cash, or a check has come in a different manner, it is not come through a accounting manner, then it is better to offer everything for the taxation, so that that money you can freely use for buying a house, for buying a car, or for buying, making investments into your dreams, or freely travel across the world or within India. You can freely expend that money. You are not actually, and if you want to buy jewelry for your wife, or you want to buy, a good mobile phone for your husband, everything is possible when you have money in number one available, just a click away. And I think you don't have to really bother that somebody is going to take it away, that money. So I would suggest more and more people should pay now more and more taxes. And my personal experience tells me, at least my growth has been contributed by this strategy in last 20 years, that pay maximum taxes. And I think that is why I thought I should tell you. Asta, you can kindly go ahead, sir.
Yeah. So there's a rebate also which is available. So when we were discussing the slab rates, if I just go back to the previous slide. So if you see in case of old regime of taxation, up to 2,50,000, there is no tax, but there's a specific rebate which is allowed by the government under section 87A, that if you have income only up to 5 lakhs, there will be no tax. But the moment your income crosses 5 lakhs, you have to pay tax. And in case of new regime of taxation, that limit is up to 12 lakhs. So this 12 lakhs, till 12 lakh, there is no tax. The moment your income crosses 12 lakh, you have to pay tax. And this income you have to consider after considering the standard deduction. So effectively, in case of old regime, it will be 5,50,000, and in case of new regime, it will be 12,75,000. Now, surcharge rates. So surcharge rates, if your income is up to 50 lakhs, there is no surcharge. If your income is up from 50 lakhs to 1 crore, the surcharge rate is 10%. 1 crore to 2 crore, 15%. 2 crore to 5 crore, 25%. Above 5 crore, 35%. So the highest surcharge rate in case of new regime, so all these are the surcharge rate, but the highest surcharge rate this is in old regime. In case of new regime, this 37% is also 25%. So even if your income is above 5 crore, the rate will be 25% only and not 37%. And these surcharge rates are same for financial year 24, 25 and 25, 26. Now, we are going to do a tax comparison between the old regime and new regime of taxation. For that, we are taking some assumptions so that our calculation becomes easy. In the subsequent slide, the assumption is that the assessee is a resident individual below 60 years of age. Then he's claiming deduction of 1,50,000 under Section 80C, 25,000 under Section 80D, and he's also claiming exemption under HRA, which we are going to just discuss in the next slide. And the total income consists only of salary income. The standard deduction under old regime is 50,000. In new regime, it is 75,000. And the tax liability is computed after surcharge but before cess. So this is the slide wherein we will be discussing the computation of house rent allowance. In this, you can see there are 5 columns which we are considering. One is gross salary, basic salary, HRA received, rent paid, and the HRA deduction. So if you see, the gross salary is 5 lakh, the basic salary is 2,50,000. HRA that I am receiving from my employer forming part of my salary structure is 1,50,000. The rent that I am paying to my employer, sorry, the rent which I'm paying to my landlord is 1,25,000. So HRA deduction is 1 lakh. How 1 lakh? See, the first calculation will be HRA received 1,50,000. The second component will be rent paid less 10% of basic salary. So rent paid is 1,25,000 less 10% of basic salary. Basic salary is 2,50,000. So that is 25,000. So the second thing will be 1 lakh. I'll just go back to the HRA slide. Yes. So the first component is actual amount received, the HRA received. The second, I just explained, rent paid less 10% of basic salary. And the third is 50% of basic salary. So in my example, the basic salary is 2,50,000. So 50% of 2,50,000 is 1,25,000. So the first is 1,50,000, the second is 1 lakh, and the third is 1,25,000. So least of the following is 1 lakh, which is rent paid less 10% of basic salary. So this is how you have to calculate the HRA, and it is how it is being calculated under various scenarios. And you can have a look at it. The basic salary is given, the HRA is given, the rent paid, and we've calculated HRA deduction under various scenarios, wherein the gross salary is 5 lakh, 7.5 lakh, 10 lakh, 12.75, 13, 20, 25, and 75, assuming different permutations and combinations just for the purpose of calculation. This particular HRA deduction we have actually used in the subsequent slide, wherein we have calculated the tax under the old regime of taxation and the new regime of taxation. So this is a tax comparison under different salary levels. So if you see the gross salary in case of, we have taken 8 scenarios. So gross salary, first, I will say for 5 lakh, the total deduction is 3,25,000 and the total income is 1,75,000. So the tax liability is nil. How the total deduction is 3,25,000? 1 lakh is for the HRA deduction. 1,50,000 is for 80C and 25,000 is for 80D and 50,000 is standard deduction. So it will be 2,25,000 and 1 lakh here. So the total deduction comes out to be 3,25,000. Then the total income will be 5 lakh minus 3,25,000, which is 1,75,000. And since your total income is only less than 2,50,000, rather less than 5 lakh, my tax liability is nil. Now, if I go to third example, sorry, we can compare it with the new regime side by side. In this, only the standard deduction is allowed, HRA is not allowed, 80C is not allowed, 80D is not allowed. So only standard deduction of 75,000 is there. Hence, the total income is 4,25,000 and the tax liability is nil. Then let's discuss this third, when my gross salary is 10 lakh. So in case of gross salary of 10 lakh, my HRA deduction is 2 lakh. 1,50,000 is 80C, 25,000 is 80D, and 50,000 is standard deduction. So total will be 4,25,000. 10 lakh minus 4,25,000, my total income is 5,75,000. And on 5,75,000, my income has exceeded 5 lakh. So I have to pay full tax as per the slab rates. It will be 27,500. And if I take the same income of 10 lakh, my only deduction in case of new regime is 75,000. So 10 lakh minus 75,000, 9,25,000. But in case of new regime, the tax rate will be nil. Then this is how the deductions are calculated. So you can see in case of 13 lakh, my tax liabilities 76,500. And in case of new regime, it is 63,750. I think so. There's some punching error here. Then in case of 20 lakhs, it is 2,25,000. And in case of new regime, it is 1,85,000. In case of 25 lakhs, it is 3,45,000 and it is 3,07,500. In case of 75 lakhs, it is 16,99,500. And in case of new regime, it is 19,88,250. So only when, if you see, if I do a comparison between old regime and new regime of taxation, only in case of 75 lakh of income, because my HRA exemption is quite huge. My HRA exemption is 15 lakhs. That's why my tax is less in old regime. Otherwise, in all the scenarios, my tax is less in new regime of taxation. So if a person is not having a good amount of HRA deduction in all the scenarios, the tax rates under new regime of taxation are now so attractive that your tax will always be less in new regime of taxation.
The only thing I suggest you go back to the last slide. I only want to add, this 63,750, why it is cut. There is that, your income has gone up only by rupees 25,000, about 12 lakhs. Up to 12 lakhs, there is nil taxation. So there is a marginal relief that when income goes about 12 lakhs, so maximum amount which you pay additional is only 25,000. Whatever has gone up, not 63,000. So your income is increasing only by 25,000. So why how your tax can be 63,750, much more than even the income increase. That's why the government has given this relief. No, 1 minute. I think just hold on. The one more thing which I want to say here is actually, Asaji, is that if you see the total deduction which is there in the second column, this is the amount actually which is going away from the SSC. And sometimes it is going in house rent. Sometimes it is going in for, repayment of principal amount and various other things, etc. So the money is not remaining with you. But the best part of the new regime also is not only you get lower tax, but also that entire money remains with you at your disposal. Whether you want to give house rent or don't want to give house rent, because I've seen a good number of people start giving house rent to their relatives. And normally, they do all kind of adjustments with those relatives. I think all that jagada has gone away now. You can freely enjoy the entire money without paying any taxation. So up to 12 lakh rupees, that means 1 lakh rupees a month, there is no tax at all. I think maybe for salaried people, maybe up to 12 lakh, 50,000 rupees, there's no tax. And even, the tax rate is so low. If you see everybody is saving. If you see, rather than 76,500, this is before deduction, after deduction. But you're paying only 25,000 in case of 13 lakhs. Even in case of 20 lakhs, rather than 2,25,000, you're paying 1,85,000. But if you see without deduction this amount, this difference will be huge, very huge. So government has given a very big examples. Everybody don't have deduction. Suppose I'm living in my own house, there's no house rent allowance. Suppose I have no medical expenditure or no other NTC I have not gone, or my employer has not given me a house rent allowance, he has given me only plain vanilla salary. I don't get that house rent allowance deduction. So I think considering all this, now the situation is many times better. And I think I will plead that at least from 25-26 ko chhod dein, starting from 1st April 2025, that is assessment year 26-27. Next year, I think after a few days only, 1st April is starting. You can shift to the new regime without any botheration, except for those people whose salary is above 50 lakhs. I think then, of course, it will need more planning. Those people are very few. I think you can count them on fingers in India. I'm sure out of your 300 of you, maybe 100 will be more than 50 lakhs, I know. But I think, normally when I'm talking India as a whole, that number is very small. So I think go ahead. I think we can really talk about it. Asta, you can take further, please.
Yep, a second.
So I think so Jain sir actually highlighted it very clearly. The end goal for tax planning is to keep more of what you make. So it is very important to have money in hand rather than invest money at various places just for the sake of saving taxes and not even earning money out of your money. So it is very important.
One more message, Asta, as a senior citizen, I want to say that it is very important. I'm seeing a trend of in youngsters of not saving at all. I think India's major strength is saving minimum 35% of your income. So whatever your gross income, save at least 35% if you want to really grow and prosper. Because otherwise, the way the inflation is going on, the way everything is growing, maybe after 50 years of age, you'll find there's nothing enough or not enough for the age of 90 or 100 you are going to live. Most of you have to actually work till 90 years of age. And I think that gainful employment will stop coming, much gainful, maybe after 60. You will be, earning much lesser. During that period, your sickness and your taking care of yourself, you don't have to depend on your children, depend on yourself, save enough so that you depend on yourself. I think that is the message I want to give. Whatever may be your income, you may be earning 10 lakh, you may be earning 5 lakhs, you may be earning 50 lakhs. Minimum saving is 35%. That is my advice as a senior citizen and a senior tax professional. Thank you so much. Asta, I think we can take questions, whatever are there.
Yes, yes. I'll just take the next few slides and then we'll open it up to the question Q&A. So
Sure.
if you can just yeah. So another thing, team, that we've done. Asta, I'll share my screen.
Okay.
So team, another thing that we've done for all of you is, with the help of Asta and Vinod, sir, we've created this basic tracker so that you can actually just, use it, put in all the things that you need. Sorry, just give me 1 second. Yeah. So, everything that we covered so far, I hope you can see the Excel tracker up on my screen. I'll increase the size a bit, right? So this was all the tax slabs that Asta was sharing about. And what we've done is we've made it super, super simple for all of you to actually put in your salary, put in your components of the salary, the additional deductions and savings that all of you are doing, put in your HRAs on this side. And what this tracker will do, I'll just show it to you again on a high level. What this tracker would do is it would completely calculate how much you're finally supposed to be paying as the tax outgo under the old regime versus how much you pay under the new regime, right? So based on the salary, all that you've got to do is the instructions are well written on the top right. Just go through these instructions. We'll share this tracker with you. Happy to share it. The Shiva's team will share it later on, and we'll put in the link as well in the current chat, so you can access it easily. All of those trackers are, so all you've got to do is, just change your salary here and everything else will get calculated. The first column, the first row, just put old versus new, and other things will also get calculated for you, right? As simple as that. Try to make it super, super, super simple for all of you. Yes, excited?
Akshat, just one request. If you can also put the link on the chat today, maybe
Sure.
everyone that has joined the session today will get some time tomorrow, since it's the weekend. Maybe they'll start calculating, all of these.
I'll just do that.
Sure.
Allow me a few minutes and I'll just do that.
Sure, done.
Cool. Yes. And with that, I think we've completed most of the session. I do want to call out that there are a personal advisory and filing of income tax return, which Astha's team does. Right. So in case any one of you have any questions, you could either drop an email to this particular email or call or WhatsApp on the number given. Somebody from the team will reach out to you and then help you with your advisory as well as tax savings. Right, you can take a quick screenshot of this if required, or take a photo. I'll wait for the next few seconds on this slide. Further, moving on, do want to tell you, and I think a lot of you are already a part of it, but for those of you who are not, as they say, tell me and I forget, teach me and I may remember, involve me and I learn. So tell me and I forget is what usually happens, right? People do tell, save taxes, plan, save money, invest money, but then, we tend to forget all of that. Teach me and I may remember, and that's what we've done today. Thank you to Asta, thank you to Vinod sir for sharing their time. They were able to teach you, and I hope you all remember. But involve me and I learn, and that's what we do, right? That's the main motto. So we've created a community on WhatsApp. It's a very actively used community. which has about 8 to 10 groups depending on the topic of your interest, right? So all you can do is just scan this community. It will redirect you to a WhatsApp community. Inside that, there are multiple groups, one dedicated for taxes, one dedicated for investment products, one dedicated for credit card benefits, insurances, so on and so forth. And based on the kind of question that you have, you can put it there. It's a community of like-minded people, right? So all of us try to help each other. This is absolutely free. It comes as a benefit to you with the tie-ups that we have with Ethica. So nobody will ever ask you for any money there. At the same time, we also do a Paise Pe Charcha session one Sunday every month on any topic which is being asked by the community members, right? So feel free to join this community as well. Absolutely done this for you to encourage talks about personal finance. At the same time, it's moderated by Pennywise team. So, hopefully you should make a lot of value out of it. With that, I think I've covered almost everything that I had. And now I think we can open up the desk for question and answers. And I think Vishalji, Srinath, if there are some questions that you guys
Someone
have.
mentioned actually
Oh, yeah.
35% saving means we have to keep cash or invest in government FD or RD or invest in stocks. So when Jain sir actually spoke about 35% saving, it is not about keeping that money in cash. You can keep it invested, like you can keep it in FD, you can keep it in stocks, you can keep it in mutual funds, you can keep it in sovereign gold bonds or anyways, but just save that money so that it grows. That's the basic intent of saying the 35% saving money. So grow your money while being invested.
And in fact, Shiva, I'm not sure if we recorded the previous session that we did on 14th Feb, but if that recording is available, maybe you could also share it with the people. So, folks, we've designed this, you could say, a simple rule saying the 30-20-50 rule, where we suggest you invest 30% of your money, save 20% of your money for your immediate needs, and spend the remaining 50% on what you really need to spend, right? And it was a very detailed session. You actually, there are strategies of clubbing it with something called as a 3 bank account strategy to automate this entire process. And further, help you with the effective budgeting strategies as well. So I'm sure a lot of you who filled the pre-workshop questionnaire must have seen, a few questions from our previous session. But yeah, feel free to reach out to the Ethica team or to us to get an access to the recording of the previous session. It surely will help you, and hopefully we should be coming back with a lot more. And in fact, Shiva, I mean, if you want to take a minute to quickly introduce the team through the LMS where they can access all the modules that we've created for them.
Sure, Akshat. So, for those who have not attended the session, the last session that we did on personal finance, I've shared a link, a YouTube link where you can watch the session. And there are a couple of trackers that are available also for that session. You can absolutely reach out to me on an email that I'm giving here. For the trackers, I can share them with you. And apart from that, for those who have access to Ethica portal, you can absolutely go ahead and access a ELMS course that is created on personal finance. It's available for everyone. And I'll just share my screen to show you where you can find that exact course. Just give me 1 second.
Also, team, I've just posted the link to the tracker that I was sharing. In the meanwhile, till Shiva is bringing up his screen, I've just posted the link to the tracker. Shiva, I'm not sure if we can pin the comment or something, but if we can. So yeah, you guys can just quickly copy paste that message, right? There are some instructions in the first tab, so don't directly start requesting for access. All you've got to just do is click on file, make a copy, and it will actually get copied to your personal Gmail IDs. Right? You can do it in your free time. So this will give you access to the tax calculator.
Sure. So I'm also sharing my screen. So after you finish watching the video, the YouTube link that I shared in the comments, you can log into your Ethica portal and you can click on something called as employee learning that is available on the portal. And once you click on courses, you will be able to see a course on fundamentals of personal finance. This is again done by Akshat himself. So this is a course that is readily available for you to go, and there are certain modules that you can finish. There's also, certain Q&A that is available in the course. So feel free to go ahead and start this course and finish all of your fundamentals of personal finance. And I'll be also be able to share the Excel trackers that Akshat has shared, apart from the one that we're discussing today, right? This is something that I wanted to mention. And apart from this, for the session that we've just done, we have a small poll while we are doing the Q&A. I request all of the attendees today to, fill your responses. Your feedback is very, very valuable for us. We can plan more sessions like this around mutual funds, around insurance, but, we need to hear that from you. So I request every one of you to, give us a feedback on the poll that you see on your screens right away. So please take 5 minutes of your time and please give us your valuable feedback. And we'll open the floor for feedback now. We'll open the floor for feedback while we are also receiving responses from all those attendees that were available here.
Yeah.
So I request you to post your questions in the Q&A, uh, right, that you see on your screens. And also if you can post some questions in the chat box, or you can raise your hands so that I can bring you to the panel, and then you can switch on your audio and video and ask questions so that Asta and uh, Sir Vinod Jain sir can also answer your questions. Any questions regarding whatever we discussed so far, please raise your hands. Or so we have a raised hand from
Sorry.
Viplav.
I'll
Sure. Just one
Sure.
thing before that. There are a lot of questions on NPS. It's better, Asta, that if you can just take about 2 minutes to explain the deductions which are available on NPS, both from the employer side as well as the individual contribution.
I think I will try and supplement that part. I think Asta has already explained. What is happening is National Pension Scheme is a very beautiful scheme Government of India has brought out. In this scheme, you are depositing money and it is being managed by a professional, and for which you are entitled to a pension. After your retirement, you're entitled to a pension. I think there are also schemes where you can draw a lump sum amount after you retire, or suppose you stop working and then also you want to actually, you prematurely retire. I think there are all kind of options which are there. That is what is National Pension Scheme. You can read about it. What is National Pension Scheme? On the NPS website, it is there. All details, FAQs, etc. are all available. But the primarily thing as far as deduction is concerned, NPS, there are two things which is possible. One is that the employer contribute. So whatever employer contribute till now, the old regime, for the government employees, it was up to 14% of your salary, which was free, that they can contribute up to 14%. No amount is added to your income. And in case of the private sector employees, it was 10%. But now the limit has, in the new regime, has gone up actually to 14%, even for private employees, private sector employees. So whether you are a private sector employee or you're a government sector employee, you are entitled to, if your employer actually opts for National Pension Scheme contribution, then that amount is not added to your income. So suppose you have about 20 lakh rupees as your gross salary, decide with your employer. If you can contribute about 14%, that means about 3 lakhs he contributes, and 17 lakhs he gives you, or 15 lakhs his basic salary, and 14% of that he contributes. That entire amount is not added to your salary. It keeps on getting accumulated along with interest, etc., based on which you are entitled to get pension over several years in future once you retire. I think that is where the scheme is. But when as an employee you deposit, in the current scenario, in the old regime, there was a deduction which was part of the deduction, which was part of the overall 1,50,000 rupees, I think, which Asta has shown that screen. And in the new regime, there is no deduction for the contribution which you make. You can yourself also make investment. And I would suggest, a part of your money which you save for yourself, you can also contribute to NPS, because that's a good area to contribute. They are able to give you interest ranging from 8% to 10% from year to year, depending on how much they are able to earn. But that income is much more than the fixed deposit interest income. In any case, and right now, in any case, even on that interest, you are not going to pay any tax. It is only when you actually draw that money over the years, maybe after you retire, after 60, 65 years of age, when you draw that pension, only then a part of that may become taxable depending on whether you are about 12 lakhs or maybe at that time, the exemption limit itself might be 50 lakhs. So maybe whatever you draw at that time, above that exemption limit, you may pay some taxes there. So no taxes right now. You can contribute your saving to the NPS as far as yourself. No tax reduction. Your employer contribute up to 14% of salary. There is no incidence of income tax on you. I hope I have explained you.
Thank you so much, sir. Akshat, this is also a brilliant idea. I was just, since there are a lot of questions around NPS, maybe we can do a small focus session on NPS and see if we can gather some audience and discuss in detail about NPS.
That's right.
That's
That requires detailed session.
Yeah.
happy to.
So, any
Fact,
questions
that's
regarding?
another.
Yeah.
Sorry. I was just saying,
Go
in
ahead,
fact,
go ahead,
that's
Akshay.
another topic of a lot of interest because it starts from not just going into NPS, but right from retirement planning to how much do you really need to create as a corpus 15, 20, 25 years, and the earlier you start, the better it is, right? Because the compounding benefit helps. And then how can NPS help? How can your existing schemes help, and how can mutual funds help? All of those things is something that we can cover in detail. So yeah, and then also, folks, I've posted a link to a LinkedIn post. It would really mean the world to us if you could share your nice comments there. If there are any non-nice comments, you can share that personally to me. But all your nice comments can go on the LinkedIn post. Just joking. But yeah, I mean, it would really mean the world. In fact, I've also tagged Asta, Vinod sir, so you can feel free to connect with them. You could connect with me, and happy to help you through your journey of personal finance. That's the goal. That's the motto of Pennywise. We want to educate people on personal finance, spread financial literacy, and that's why these sessions without any vested interest, right? Again, if you see the session today, everything was done with the sole aim of helping you learn more about taxes and not selling you any services or products, right? So yeah, I hope we've covered any questions, folks. We are happy to bring a few of you on call. If there are any questions, you can raise your hands. Anything there might be a couple of questions that we might have missed answering. So if there's anything, please feel free to raise your hands. Shiva, there is
many of the questions which came on chat has been answered by my colleague on the chat itself.
Yeah.
That may be the reason that people have.
Correct. I was checking the same. Most of the questions that are there in the Q&A section have been answered. So we have a couple of raised hands, Akshat. With your permission, I want to take them and see if they have any questions that they wanted to ask. So I'm bringing Viraj on to the panel. Viraj,
Yep.
you can
Am I
you can
audible?
ask your question. Yes, you are, Viraj.
Okay. Hey, thanks for the session, guys. Really helpful today. I had one question, maybe a follow-up after that. So about the NPS part on the new regime you guys mentioned, it's up to 14% on the base salary, right? So what if, I mean, one thing is I need a clarity on what was that part from where employer contribution. Right now, I believe not all employers agree to that contribution part, and if not, then it is only on the employee to contribute on his own. So I need some clarity on that part so that maximize tax can be saved over there. So what if what stops from the employer to not to contribute to the NPS contribution from their end? I believe at our organization it's
It
not.
will primarily depend on, when you are actually negotiating your CTC with the HR of your potential employer. And even if you're already employed, you can talk to your HR and maybe they can redo your salary structure maybe from 1st April 2025. And then maybe part of your salary can be moved from cash payout to NPS, and I think they can contribute. Because ultimately an employer will pay you a particular CTC.
Correct.
Everything comes within that CTC. They will not pay 14% over and above that CTC. So it is CTC planning primarily in such a manner so that tax incidence can be reduced.
Yeah, just to add to that, Viraj, see, most of the organizations are enabling. See, what it does is it does have a little bit of operational work to be done by the company, which means that they have to deduct that amount from your CTC, and then every month they have to deposit this money into the NPS account. So there is a bit of a operational work which gets involved. So what I would suggest is whenever there's HR feedback sessions, right? If NPS is not enabled in your organization, you have to give the feedback to them to have that enabled, because more the employees ask for it, the companies are likely to have that incorporated. It's not a, and we have seen this, right? We have seen more and more companies opt for the NPS in their organization as well to give that benefit to the employees. So it's just more of the employees asking for it, which will drive the employers to do it, and it's not too much of an operational hassle.
All right, Srinath, I'll take that as a feedback.
Thank you so much,
And
Viraj.
we'll be
Yeah.
happy to have that. So in fact, there are certain organizations where we are helping them understand the NPS to their employees and then have those incorporated in the company, right? So we'll be happy to collaborate on that with your employer if need be.
Please.
Yeah, you just ask your HR to reach out to us, give mine or Akshat's coordinates. We'll
Yeah.
take it forward from there.
Sure.
Thank you so much,
There
Viraj,
was
for
one last
yeah.
maybe from my end. I think from Pennywise, are there any services also that Pennywise offers? I think that point was not maybe discussed on this call. Maybe as a closing statement, if there are any professional services or offerings, maybe someone can also uh, point out that note also. If someone is interested, maybe we can personally reach out.
Sure, Virat. So I think I did share, but maybe it got missed. So if you're looking with respect to specialization on tax services, Asta and Vinod sir's team does help with that. So here is the number and the email ID for that. You could
Got it.
reach out to here. If you're looking for help with the personal finance, education, then you can also reach out to me, or through the group you can get my number, or I'll just post it in the chat.
Perfect.
Sure.
That's it from me, guys. Thanks a lot.
Great. Thanks, Viraj. Thanks for asking those questions. We'll take one last question for this evening. We have a raised hand from Himanshu Pathak. Himanshu, if you can hear me, you can ask your question now.
Yeah, can you guys hear me?
Yeah.
Yeah, so I wanted to ask the question about the tracker. Like we have the employer deduction for the PF as well as for the NPS, right? So where can we enter that detail in the sheet?
So your total contribution will be 14%. I mean, whether it's through employer or through employee, right?
No,
So
no, I understand, but if you see, it is written like for NPS max is 1.5, right?
This
So
is okay. Yeah, this is I think this calculator does not have the employer side of the contribution. We'll add that, Himanshu. I think that's a good feedback. We should have done that. This is on the individual level, right? Up to 1.5 lakh and then additional 50,000
yeah, I
that you can
understand.
add. The corporate one is not enabled. We'll add that.
Okay, but let's say if I have to do that, what can I do? Like I can just increase the annual salary by that amount. Like let's say if employer is like submitting PF 1 lakh and NPS is also 1 lakh, so can I just reduce the salary by 2 lakh and then put it into the tracker?
That could be a workaround.
Yeah. Okay. Yeah. Thank you so much.
In fact, see, when the employer is contributing, that will not even form a part of your CTC, right? So it will not come in your gross earnings. So you can remove it from the gross earnings. Yeah.
Okay, I can reduce the gross salary then, right? Yeah.
Yes.
Okay. Yeah. Thank you so much.
Wonderful. Thank you, Himanshu. Just one question that caught my eye in the chat box is Venkata Krishna has a question regarding PF transfers. Is that a related question to the session that we've done today? Vinod sir, Asta, if you can.
No, I think whether it is related or not, I think we should not remain anything unanswered. PF transfer, if they want to make, I think PF transfers from one employer to another employee is actually freely allowed now. Of course, that situation will arrive only when you don't have you are not with the PF trust. You are with the PF trust. That means recognized PF trust of the employer. Only then a transfer issue is there. Otherwise, for all the provident fund, which is Central Provident Fund Commissioner, they maintain the account and the code number remains same. Only the employer name changed and the money can keep on coming. Your money remains there itself. But when you're talking of transfer, suppose you are with the employer A, who has a recognized provident fund trust, and the money is deposited there. As soon as you move from employer A to employer B, you can make an application to employer A. He is bound to transfer that money to employer B, recognized provident fund trust. In case employer do not have a recognized provident fund trust, in that case, that money can be given to the Central Provident Fund Commissioner of Government of India, and of course, then a new unique ID will be get generated from there, and then you can carry on from there. And in case somebody is actually not continuing any employment, I think a minimum period of 5 years is prescribed. After 5 years, you can even withdraw the provident fund you can request for the withdrawal. And there are exemption rules, etc. And there are how much you will get, how much you will not get. There are rules also for you can borrow from your provident fund also. I think that's a matter of detail. We'll take it separately in a separate session. But transfer, I've explained you. Thank you.
Thank you so much, sir. So that will bring us to the end of the session today. I would like to personally thank Vinod Jain sir, Asta, Akshat, Srinath sir, Gautam, Paulmit, Vishal, everybody who's contributed to this session today. I'm very, very happy that we've done this session today and we've answered a lot of questions while we are doing the session in the back end. I hope a lot of people who attended the session also benefited from the information that we shared today. So thank you so much, everyone. Thank you. And last but not the least, I would also like to thank all the audience who's taken out time from their busy schedules to come and join us on this session today, learn more about taxes. And we will also come up with a lot of similar sessions in the rest of the year. Most probably one on tax filings also around May, June, if that's a possibility. I'll have a small round of discussion with Akshay to see how can we plan that. So thank you so much. You have a great weekend, and we'll join you in the next session next Friday.
Shiva, sorry, Shiva. I just
Sure.
wanted to add on. So, we just got an alert from Google on the tracker saying that due to heavy collaborator use, some of the tools might not be working, right? So I'm sure this session is a hit where people are actually using the tracker and trying to simplify their taxes. So a big thank you to Vinod sir and Asta for their time.
Thank you so much.